Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. Each week I bring you the very latest news on the different sectors of the New York City market, the luxury market, the Manhattan market, and the Brooklyn market. Why do I do it? I do it because I want you to be informed. If you're informed, you will more than likely have a successful outcome if you want to buy or sell here. So that's why I do it. If this kind of information is of interest to you, feel free to subscribe to my YouTube channel so you get all of my latest reports. And as always, feel free to post your questions below or reach out to me with any questions that you might have. All right, let's get started. We're going to start, as we always do, with the luxury market. 26 contracts were signed last week at $4 million and above. That is 6 more than the previous week. Condos outsold co-ops 20-3, and there were 3 townhouses in the mix. It's really showing the resilience of the residential luxury market here in Manhattan, particularly in light of the 20.6% decline in the S&P since the beginning of the year. That decline marked the S&P's worst performance since 1970. At the same time, the NASDAQ was also down 30%. Okay, so let's talk about the number 1 contract last week. That was a townhouse at 17 West 9th Street, asking $13.995 million. It was reduced from $19.995 million when it was listed a year ago. This 5-story, 26-foot wide Italian style townhouse is configured as a ground floor commercial space with 6 rental units above it. Annual real estate taxes are $118,409. The number 2 contract was Penthouse 86B at 15 Hudson Yards. A sponsor unit asking $12,915,000. This condo has 3,147 square feet, including 4 bedrooms, 4.5 bathrooms, features 10.8-foot ceilings. It also features dramatic south and west views of the Hudson River. 15 Hudson Yards has 285 units on 88 floors, started marketing off floor plans in October of 2016. Amenities include a concierge, a fitness center, 75-foot pool, a children's playroom, a ballroom, catering kitchen, and a residence lounge. All right, let's talk about the quick stats of last week. The total weekly asking price sales volume, $203,225,000. Average asking price, $7,816,346. The median asking price, $7,572,500. The average discount from original ask to last asking price, 4%. That's a little higher than we've been seeing. I think last week it was 2%. You know, anytime it starts to jump up above 2 or 3%, for me, that's an alert to kind of start keeping an eye on this negotiability. And I'll talk more about that as I get into the rest of this week's report, because we are seeing increased negotiability on the part at all price points. In Manhattan, we are seeing that as we compare spring to the summer. So we'll talk about that in a second, but let's go back to our quick stats and say average days on the market, 531. Well, when you consider that 15 Hudson Yards is a sponsor sale and they started marketing these units in 2016, it's no wonder that the average days on the market is skewed so much. The townhouse at 17 West 9th Street is a resale, and that also was listed a year ago, but at a much higher price. So they were obviously a little too ambitious. Took a while for both properties to achieve signed contracts, but well done, congratulations, and thrilled at this rebounding of the residential luxury market. 26 contracts signed this last week. Okay, that's it for this week's look at the luxury market. So what's happening in the Manhattan market? Well, the answer is as I've been saying, this is a market in transition. The supply is working its way down slowly. We're not expecting a lot of new inventory. The monthly contract activity is down, kind of back to normal speed. Demand has peaked. Again, we are working its way down. If the summer pattern holds true, we're going to start to see the contract activity, the demand, if you will, start ticking up towards the fall. Sellers, here's something really important to keep in mind right now. The market is down probably around 3 or 4% from where we were in the spring. You don't expect to get what you would have gotten for prices 4 months ago. So be very, very careful when it comes to pricing. But I also really want to talk in a more macro way about what's going on in the Manhattan market. And there are some things to know. And maybe this would hold true for Brooklyn as well. Let's just say it will, right? On some level. So let's take a look. So whether you're a buyer or seller, here are some things that are really important for you to know. First of all, just to talk about how we can look at statistics in the market. As you know, we don't really know what's happening exactly in this market because all we have is really the contract activity, demand, let's call it that, and the new properties, the inventory coming on the market or being absorbed. We won't really know exactly where our prices are now till about Q3 or 4. So here are some things, though, that we should be keeping an eye on. And if you are thinking about buying and selling, or you're just a property owner and you want to make sure that you know what's going on in the market so you can see how it could be affecting your position. This is to the sellers. You should brace for a relative slowdown. You sellers have enjoyed for the last 5 quarters unseasonably high deal volume. For the first time in a while, we're starting to see declining bid activity and deals being made. So, thinking about it like this, we were going 100 miles an hour. Now we're probably looking at slowing down to about 65. Relatively slower. We haven't crashed into a wall. We haven't come screeching to a halt. But good to know. This is why I say you really want to be careful about your pricing. So be careful about your pricing. Sellers, if you are a seller only at a price and you have the option, you might want to consider renting. If you cannot get the price that you feel you must get. If you rent, you can monetize your investment. You can ride out the market and see where things go. So if that is an option for you, you might want to think about that. So buyers, be prepared now. We expect that contract activity is going to fall a bit. That's going to change and shift the power dynamic, putting power a little more in the camp of the buyers, which means you'll have a little more negotiability. We may see a little more inventory coming on. That could feel kind of nice to buyers as well. You may find that you will have increased leverage in the coming months. Some market dynamics to think about, buyers. There were 3 primary factors to consider: availability of inventory, sellers' willingness to close a deal, and less buyer competition. Now, obviously, this is going to hold true more in the summer than perhaps the fall, but buyers, if you've been looking and you're getting frustrated and you really want to make a deal, pay attention to these factors, because those factors represent for you opportunity. To kind of sum it up, let's say the summer is looking better for buyers and sellers. The supply is steadily rising for the first time in nearly 2 years, just as the level of deals is beginning to slow. Moreover, the slowdown will undoubtedly feel magnified by the usual summer slowdown. And if you put all this together, buyers this summer will have more choice and a chance to negotiate with less sense of urgency. And this could well be the first opportunity that buyers have seen in this market since the reopening after COVID. All right, let's now I've given you my kind of longy speech. I'm going to share, as I always do, the kind of the 1 week markers of what's going on. We saw supply at 252. That's down almost 33% over the last week. Contract sign was up 10.24%, 226 contracts signed. Again, though, keep in mind that if you were looking at this just kind of week over week, but if we step back and look at the bigger picture, which I'm showing you in this chart with supply, you will see that, the supply is just steadily kind of declining. The demand is kind of going sideways. The weekly new listings is also ticking down as expected with seasonality. However, the overall number of new listings does remain ahead of the previous years. Again, that is sort of a signal to both buyers and sellers of increased inventory overall and what that will mean for prices and demand and negotiability and all of that. The signed contracts just ticked up slightly this last week, but will likely remain in a downtrend until the end of the summer. So that is it for the Manhattan market. A lot to digest, I know. And as I say, I wanted to give you this kind of macro overview of some really important things that you should be thinking about, paying attention to. This goes for Brooklyn and Manhattan, which is why I sort of did this a little differently this week by sharing this information with you a little bit more upfront. Still giving you the same charts and everything, and I'm going to do the same thing for Brooklyn right now. So here's what's going on in Brooklyn. We saw the supply fall a little bit, 186 properties on the market, coming on the market, down about 13%. Contract signed was up almost 8%, 150 contract signed. But as I say, the charts that I shared with you for Manhattan really will likely hold true for Brooklyn as well. What all of this is meant to say is we are no longer at the highest point of the market. That is behind us, about 4 months or so. Sellers do not count on getting those prices. So if you've been on the market for a couple of weeks, as I always say, and you're not getting the activity you want, adjust your price and do it quickly. You want to get your deal done as soon as you possibly can, unless you opt to rent, and then you could rent and just let it cycle around for another year or two and see where the market's at then. Buyers, be ready, be prepared, make sure you have all your ducks in a row. Keep an eye on those properties that were maybe a little out of your range, but they've been sitting on the market. Could be some really good opportunity there for negotiability. Take advantage of this market and make sure that you have all your searches set up so that you can see what's coming in, and be sure to still jump on those things that look good to you, because likely they'll look good to other people as well. And maybe now that many sellers are getting more in alignment with their pricing, you will be able to buy the home that you've been wanting. Okay, that's it for this week's look at the state of the New York City real estate market. As always, feel free to reach out to me with any questions. I'll be back next week with more up-to-the-minute news on what is happening in the New York City real estate market. In the meantime, take care.